Picture this: a world where the once sky-high prices of gleaming new cars and trusty used vehicles are about to tumble down a cliff of economic reality. We've been cruising along the highway of automotive inflation, where every model, new or old, demanded a premium, defying the gravity of market principles. But now, the road ahead is riddled with the potholes of oversupply and dwindling consumer interest, signaling an imminent plunge in prices that could redefine the value of cars as we know it. In the rearview mirror, we see the trail of the most significant car price bubble in recent memory. But ahead lies the potential for the most dramatic crash in the auto industry, one that experts predict will surpass the downturns of decades past. As we prepare to shift gears into this new chapter, join us in dissecting the trends that led us here and the forecasts that spell out a cautionary tale. Rev up your engines for a deep dive into the dynamics of the car market, and make sure to subscribe and hit the like button to stay updated on the latest developments as this story unfolds. As the automotive supply chain untangles itself from the logistical nightmares of the past, a new challenge accelerates towards us: a deluge of vehicles flooding the market, shifting the narrative from scarcity to surplus. We're witnessing the pendulum swing from a barren market landscape to a full-throttle overflow of inventory, with vehicle values descending at a pace that leaves industry analysts and consumers alike grappling with the velocity of change. A recent UBS report rings the alarm, forecasting a production excess that overshadows sales by a staggering 5 million vehicles, necessitating aggressive price reductions to clear the burgeoning car lots. In this unfolding drama, the opening salvo of a price war has been fired, echoing through the electric vehicle (EV) sector and revving up to disrupt the combustion engine market. As the second half of 2023 approaches, the tremors of this conflict are felt across the industry. Tesla's drastic price reductions set a precedent, with the Model X shedding a significant portion of its value, sparking a domino effect that sees used car prices across various brands take a precipitous dive. We're not just talking minor markdowns; these are substantial slashes in value that reflect a shifting paradigm. The luxury of Infiniti QX80 and its Nissan counterpart, the Armada, along with the rugged Land Rover Discovery, are all navigating through a market that's rapidly recalibrating price expectations. With each percentage point drop, the message becomes clearer. The era of inflated car values is grinding to a halt, and a new market reality is taking the driver's seat. The automotive landscape is undergoing a seismic shift, especially in the realm of used vehicles, where the tremors of price reductions are felt most acutely. Take, for instance, the new Nissan Frontier, which currently boasts a price tag of approximately $39,833. By the time we bid farewell to 2023, projections suggest a dramatic plunge to just $27,146. The used car market is bracing for an upheaval, with experts anticipating that a 3-year-old Toyota Camry, now valued at $27,404, will see its worth diminish to $16,548 by year-end. The descent in value isn't exclusive to sedans. Popular SUVs like the Jeep Compass, Honda CR-V, and Toyota RAV4 are on a similar trajectory, each slated for significant price erosions. For those who recently invested in these models, the road ahead is paved with depreciation. Despite the noteworthy depreciation already witnessed, it's crucial to remember that used car values have soared by an astonishing 88% since 2020, indicating that the steepest declines may yet be on the horizon. As vehicles roll off the lot, their value takes an immediate hit, ranging from 10 to 20%, exacerbating the financial blow to recent purchasers. This downturn reverberates throughout the auto market, eroding the inflated values that have long persisted. With equity market bubbles bursting and disposable incomes under duress, the American consumer finds themselves navigating an increasingly constrained financial landscape. Compounding the crisis, a surge in vehicle repossessions has emerged as buyers from the pandemic era grapple with loan defaults. Astonishingly, repossessed vehicles are hitting auction blocks with loan-to-value ratios soaring beyond 130%, a stark testament to the precarious debt situations many Americans face. Financial institutions like Wells Fargo are sounding the alarm with rising auto loan loss ratios, painting a stark picture of the challenges ahead. As supply inflates and prices deflate, buyers who have paid premiums for new vehicles like the coveted Land Rover are confronted with the harsh reality of rapid depreciation. Vehicles once purchased at inflated prices will not maintain their value in a market corrected for normalization. The inevitable outcome? A collective financial hemorrhage for consumers who've invested in an unstable automotive bubble. In the midst of the unfolding auto industry crisis, there's a glimmer of hope that's being heralded by government officials. They claim the impending car market crash could serve as a much-needed valve to release the pressure of inflation, a problem, ironically, of their own making. For consumers strangled by the current economic strain, this downturn might provide a much-needed reprieve. Yet, for those locked into costly extended leases and high interest rates, the horizon looks anything but bright. As we navigate these turbulent waters, J.P. Morgan's recent study signals that the average used car prices could nosedive to $21,000 by midsummer. Echoing this sentiment, industry experts like Cox Automotive's Jonathan Smoke predict a stabilization in production that will bring about more manageable monthly payments as prices decline. Dealerships like Tom Tinsdale Chrysler Dodge Jeep and RAM are already witnessing sharper price drops than anticipated, confirming the onset of a broader trend. Chris Frey, with his finger on the pulse of the industry, foresees a continuous decline akin to the financial crisis of 2008. Ian Shepherdson of Pantheon Macro and economists at Goldman Sachs reinforce this view, forecasting a steep plunge in vehicle prices as supply chain woes ease. It's becoming increasingly clear. The car market is on the brink of a recession as dire as any in recent memory, with falling sales volumes and plummeting prices not just in the U.S., but globally. The unprecedented 88% surge in car values over 3 short years has set the stage for a correction of equal magnitude. The bubble that has inflated asset prices across the board, from stocks to real estate, is now deflating, with the auto industry next in line. The chaotic blend of market crashes and external economic shocks could exacerbate an already fragile situation, particularly if we descend further into recession. For those of us watching this unfold, the prudent course of action is to weather the storm from a safe harbor, avoiding any rash decisions until the market stabilizes. Just like in the stock market, the auto industry is overdue for a correction that will restore some semblance of sanity to a market that has long lost touch with reality. As we brace for a tumultuous year ahead, it's essential to remember that this is but the tip of an iceberg in an ocean fraught with economic icebergs. With a downturn knocking on our doors, the entire ship of the auto market is at risk of capsizing swiftly. Billions of dollars in car values are poised to evaporate, but it's the steps we take now that will determine whether we sink or sail through these choppy seas. If you found value in our analysis, let's keep the conversation going in the comments below. Your thoughts and insights are invaluable as we navigate these uncertain times together. Don't forget to like, share, and subscribe for more updates on this developing story. Every interaction helps us continue to bring you content that matters. Thank you for watching, and stay tuned for what comes next in this unprecedented auto market saga.